get started, I want to apologize to all my viewers for not coming out with video for a long time. So the last video I came was around 4 months back. So let me just explain you the reason why I was not able to do this consistently. This all happened in the month of February. So February 24 was a monthly expiry day. So it was a Thursday and it was the last Thursday of that month as well. It was a monthly expiry and I had huge positions in monthly expiry. And everything was happening perfectly well till then. So till then, every month I used to make consistent returns and I was in wonderful profit. On 23rd February, after market closed, our Putin went and attacked Ukraine. And you won't believe, on 23rd night, I was sitting with a profit of 7 lakh in my trades. I have not closed any of them, but I was having a profit of 7 lakhs. Then on 23rd night, as I told you, Russia went and attacked Ukraine. That was the first time where they attacked. So the entire world went into panic. The US market fell drastically. If I remember correctly, Dow Jones fell close to 1000 points on that day. Next day, our markets opened and there was a gap down of 500 points in Nifty. You can go and check the charts. And after that, by the end of the day, it closed by losing 800 points. You won't believe me, one day, that is on 23rd night, I had the break-even point for me was plus or minus 500. So even if Nifty had fallen 200, 300, 400 points, I would not have been having a loss. But the huge gap down made my profit from plus 7 lakhs to minus 2 lakhs. And I closed all my positions at opening. So within 9:15, 9:16, I was out of everything. And from plus 7 lakhs, I closed it by losing 2 lakhs. And let me tell you, 2 lakh loss is not a huge hit on me, because I have lost more than 2 lakhs many times. This got me into thinking. Today, there has been a gap down of 500 points. Tomorrow, there can be an event where there can be a gap down of 1000, 2000 points as well. Right? And on that day, luckily, I had a break-even point of more than 500 points, because of which the loss was restricted to only 2 lakhs. Imagine if I had a break-even point of only 200 or 300 points, the loss would have been very bad. Okay. And now the question is not to identify or to predict when this is going to happen again, because nobody knows when that is going to happen again. Anything can happen. There can be an earthquake, there can be a terrorist attack, there can be some VVIP who may die. Now you can see most of the world leaders are above 70. Joe Biden is more than 70. Putin is more than 70. Narendra Modi is close to 70, I think. Okay, and these kind of events you can never ever predict. Okay. Now the question is, are you ready for these kind of events? Okay. This got me into serious thinking, and many people tell me that you should have had hedges, you should have bought some OTM puts so that you are protected and for these kind of events. Let me tell you, buying OTM puts, especially if you are buying deep OTM puts, it is not the solution. Okay, because if these kind of events, the loss will be fixed, but the loss will be very huge. Because once you buy deep OTM puts and calls, the margin reduces significantly. So when the margin reduces significantly, you will have extra money to deploy more volumes. So by hedging, you not only restrict your losses, but your volumes also increases. So in this example, on 24th February, if I had carried hedged positions, instead of one set, I would have done 3 sets. because without hedging the margin requirement is approximately 1.5 lakh. But by doing hedging, the margin goes down to close to 50,000. So I have that extra 1 lakh, right? So in that case, what I will do, instead of executing one set, I will execute 3 sets. So if that was the case, my loss would have been 6 lakhs. Yes, it would not have gone beyond 6 lakhs because I would have been completely protected. But 6 lakh is a huge money, right? So let me tell you, buying deep OTM options and thinking that it is going to protect you is a wrong theory. Okay. But again, there are ways of hedging. I am telling you that this is not the right way of hedging. Okay. So this got me into serious thinking where I sat down and gave a thought as to what can be done so that we can make sure we are protected for these kind of events. One of the things that came to my mind was to do intraday trading. Till then, I was not a fan of intraday trading, algo trading. So I spoke to a lot of people who are doing this. So I came out with my own strategies. I did a complete back test. Being a coder myself, I was able to code them in Python and I was able to do back test, and now a portion of my fund is being traded using algo. Okay. So this is one of the things which I had to do, because of which I was not able to do videos. First, I am a trader. Then this training, YouTube, they are all secondary. Okay. If my first trading has impacted, then it is my responsibility to first fix them. Then look into other ventures. Okay. So because of that, I had to completely concentrate on backtesting, algos development, and many other things, because of which I was not able to concentrate on videos. Okay. So now I am going to talk to you about a strategy in a case where you will not have loss at all. Okay. And let me tell you, this is a trade which I have taken. So let us see the trade. Here I have taken a trade in Adani Enterprises where I have sold 3,600 call at 93 rupees. So I executed this day before yesterday, 2 days back. So you all know that Adani Enterprises has been rallying for some time now, and it has rallied a lot in last month and this month. So I thought that momentum will not continue in Adani Enterprises. So I went ahead and sold the last strike of which is opened by the exchange. So there are no other strikes after 3,600. So I sold it at 3,000. I sold 3,600 call at 93 rupees. I have been telling this in my blog, which I write every day, and people who are reading this, they will be aware that I was expecting some retracement in Adani Enterprises. Yes, in my blog I suggested that I would be executing a call ratio spread, but after seeing the movement in Adani Enterprises, I thought of going and selling naked call option. Okay. So now I show you how this looks in the payoff chart. So here you can see that I sold 3,600 call option. Okay, it's asking me to log in. Let me just log in. Okay. So Adani Enterprises, I sold, and this is not in the current one, it is in the next one, which I sold at 3,000. I sold 3,600 call at 93 rupees. So this is how the payoff chart looks. Okay. So here lower I don't have to worry. The more it falls, the more it is good for me. The upper break-even point is approximately 3,693. Okay. So let's consider it as 3,700. Okay. So in last 2-3 days, Adani Enterprises has fallen, and I am already sitting in a profit of approximately 11%. Okay. So now I will convert this strategy into a no loss strategy. So how do I do that? Simple. I buy a call option of 3,500. So here you can see that this strategy, one second, accept this. So here you can see that my Adani Enterprises has now become a no loss strategy. So now no matter what happens to Adani Enterprises, I need not worry. Even if it falls to 1,000 rupees or even if it goes to 5,000 rupees, I need not worry, because I will be definitely making a profit of 23,000. Okay. So this conversion has advantages, it has disadvantages, and you should know when you should be doing this. So I will be discussing all of them now. When should you be doing this? Okay. If you are trading in stock options, it is better you do this, because you never know how stocks are going to react. One small news can take the stock higher or lower by 25-30%. We have seen a lot of times, especially the high beta stocks like Tata Motors, Bajaj Finance, Yes Bank, IndusInd Bank, Adani group of stocks. So one good news, the stock will go up by 20% or 30%. One bad news, the stock will fall by 25-30%. So since there is lot of time for expiry, anything can happen. So if that happens, then the profit, whatever I am seeing here, will just be a paper profit, right? So you will not be able to get that profit. So in this case, you can either close your trade, book the profit, or if you still want to carry that trade till expiry, then you can convert this into a no loss strategy. Okay. Now the other advantage here is, when you convert this into a no loss strategy, the margin gets released, and the margin required for this conversion is 1/3 of the margin which you used initially. So now let's see, if I had not done this, let me just delete this trade. You can see that the margin requirement is approximately 2.5 lakh, 2.5 to 3 lakhs. Okay. Now by adding this strategy, the margin has gone down to approximately 80,000, which is approximately 1/3 the capital. So now with the extra capital, if you have any other better strategy, you can use that capital for executing a new strategy, and you can totally forget about this strategy. Here, even in the worst case, you will get a profit of 22,000, and if you are lucky and if things work in your favor, if Adani Enterprise starts going up, then you will get a profit of 72,000. But yes, the probability of getting 72,000 is very low, but 22,000 is guaranteed, which you can forget. Okay. So now if you have a better strategy in other stock options or index, then you can release the margin, use that for executing other strategies. I hope you guys like the video. Do like and subscribe to my channel so that you can learn more about trading and investing. Thank you guys for watching.